That's the power of the Fibonacci numbers, but also maybe a little bit of luck. Anyway, we're 100% short the Swiss franc. You have a good New Year's party that night because you're really worried about that one last nickel that might happen after the first of the year. But we said a lot of prayers over the weekend, and now we're going to track the trade. We're 100% short. Our stop is at 79.60. What I've done in this example is taken the September Swiss franc, which is a current nearby month, and you're going to have to take into consideration the rollover and the difference in premium. Initially, it was shorting the March Swiss franc, then rolling to the June, but we're going to track the September. So the equivalent September stop instead of 79.60 would be right above this December 31st high, which is shown on the next page, which is the first week's worth of action after December 31st, 1987. Or actually, this is December 31st, this top bar right here. And that's actually above the 81 level on the September contract, which is equivalent to the continuation chart, the monthly chart figure we came up with. So we're going to track the September Swiss franc all the way down. You can see that it gapped up on December 31st and closed on its high. The next day, the first day of trading, which I guess was January 2nd or 3rd, 1988, the market did a full gap down, thereby making you feel a little bit more comfortable. Now you can get up off the floor and go sit down. The next day was an even larger gap down. The next day was an even larger gap down. Now, what's this telling you, first of all? How do we count this decline? This is a daily chart. I don't have the hourly right here of this particular decline, but it did subdivide into 5 with large gaps in it. In fact, it was a very, very sharp, just about a 10% drop in the currencies in only 3 days. That tells you two things. One, you're expecting a primary degree C wave peak and a cycle degree fourth wave bottom in the dollar. What usually happens after that? A major change in direction. A 10% drop in 3 days is a major change in direction. So, again, in real time, we came from in a fetal position on the floor to a little bit of added evidence that, hey, maybe this preferred count is right. Of course, you never had a doubt in your mind. This subdivides into 5. How do we label it? Based on what we learned. In fact, let's just take this first period right here, 5 waves down on the hourly. Now our preferred count is looking for 5 waves up in the dollar, 5 waves down to a new low in the Swiss franc on that long-term monthly chart. So this is going to be, under our preferred count, the first 5-wave decline, the first wave down of a larger 5-wave decline down. So we're going to label this under the preferred count 1. Now you can write, the workbook is set up so that we're going to turn a page at a time, and it's going to show you about a week or so at a time. And you can keep labeling this as we go so you can see the unlabeled pattern and label the real pattern. This is going to be wave 1, 5 waves down, or what's our alternate count? Our alternate count was that 5 waves into 79.55 was just wave 1 of 5, and it's not the completed fifth. So our alternate count would be that this is A of 2 of 5 of C. Hopefully I didn't lose anybody there. But back to this chart. This is waves 3, 4, and 5. This is our preferred count. Under preferred count, it's over. Under the alternate count, this is only wave 1 of 5, and it's going to do it 2, 3, 4, 5, and complete the whole pattern. Above A equals C, but really, if you get stopped out, the next most common relationship is C would be 1.618 of A. That's way up there. So you want to get yourself stopped out if you're wrong. You don't want to hang around for a move to about 100 on the Swiss franc in a short position. So our alternate count is that this first 5-wave decline right here is A of 2 of 5. Another alternate count would be that we miscounted this, and maybe this is the top of intermediate 3, and we haven't done the 4 or 5 yet. I mean, we're trying to think of all possibilities. So another alternate count would be that this is forming intermediate wave 4. We don't want to complicate the picture, but we want to keep all alternate counts in mind. So this is basically 1 or A of either 2 of 5 or intermediate 4. Now that immediately tells us other things. First of all, we've got evidence. We're short. We're now at a profit. Our stop is still at 79.60 or 81 on the September contract. If we're wrong, we're going to do an A, B, C down of 2 or 4. So what's happening? The preferred and the alternate Elliott wave counts tell us to be short. What a beautiful strategy. That means if I'm right, I should be short, and if I'm wrong, I should be short. Not only that, but we've done 5 waves down, adding evidence that the currencies have peaked. Let's go on to the next page, showing some more of the trading. Now here's where we get down to some of those fine points of real-time trading that I was talking about. Again, this is preferred count 5 of C. And this is wave 1. Let's just label the preferred count. What happened here? We have an A, B, C to a new low. A, B to a new low, C. Forming 2. Okay, remembering from yesterday the alternation guideline, we've got 5 waves down, wave 1, and irregular or a flat wave 2. So now we know that wave 4 will probably alternate with this wave 2 and be of the sharp family, of the zigzag family. That may or may not happen, but more often than not it does. The important thing is, suddenly for the first time in 3 years, when that C wave showed that the Swiss franc was rallying in 5s and dropping in 3s, what's happening? It's now declining in 5s and rallying in 3s. It just turned itself inside out, and now the 3 waves are rallies. If it's anything you get out of Elliott wave, if you're confused on the count, you have no idea which one of these are right, it's remember that 3-step is counter trend. So you don't know whether the currencies have peaked. Maybe you couldn't count the advance, but you see a counter trend rally for the first time in a long time, and you think, I got to sell the rallies. Not only that, but there's a 5-wave decline. Even if this is an ABC, I still have to sell the rallies. If the preferred count is right, we're going to get a big payoff. So you've got an ABC. Now we get down to the fine-tuning. Is this an ABC decline under the alternate count? But the biggest hint here is all C waves must be 5. That has the look of an ABC, but is it an ABC? In other words, should I cover my shorts there, or should I go long? The answer is no for 2 reasons. 1, this, quote, C wave does not subdivide into 5. And 2, your preferred count tells you that that's not a C, but the start of a 3. Those are 2 reasons why you don't want to cover your shorts, even though it has the outward appearance of an ABC. Now let's track this 3rd wave down. 1, 2, 3, 4. No rule violation, no overlap. The 4 is getting a little high. It's starting to make you nervous again. You've had your way for a couple of weeks. You're starting to get a little bit nervous because the 4 is getting a little high. In fact, guess what this drop was? That was about a 10-minute trade deficit drop in the currencies. So people are still bullish on the currency, so they bid the Swiss back up to this level going into the trade deficit, because the trade deficits in the prior months had been so, quote, bullish for the currencies that this time it turned out less than expected for the first time in a while, and you had about a 10-minute drop down, but the psychology is still bullish. You're only in the initial first 5-wave decline. The psychology is still, okay, so it's a pullback in the currencies, let's buy it. But you know, based on your Elliott rules, that when it's over, it's over. Let's look at another page, the next page. 5 of C, 1, 2. Now here's where the degree designations come in, and you may want to refer to the notes you took down. But we're looking for minor wave 3 to subdivide because it already did a 1, 2, 3, 4 on the last page. So we want to start labeling those 1, 2, 3, 4. Now it's happening again. Wave 5 of 3, or alternate count wave 5 of C, is now subdividing in itself, which tells you it's a good thing I followed the rules of Elliott, because that kept me short when it had the appearance of a C wave, but it would have violated the rules because a C wave can't subdivide into 3. So that kept me short at least for this new low. But now what happens? You've got a 1, 2, 3. Again, you're at a new low. That could be 1, 2, 3, 4, 5, but the 5 must subdivide into 5 itself. So you wait for that 5 to finish subdividing into its own 5 until you come down here. In fact, wave 5 of 5 ended up being a diagonal triangle. I'm sorry, 5 of 3. So that you have 1, 2, 3, 4, 1, 2, 3, 4, diagonal triangle, 5, 3. Alternate is A, B, C. Let's expand the alternate count a little bit more. ABC of intermediate 4. Maybe intermediate 4 is done. Or ABC of minor wave 2 of 5. Again, back to that weekly chart. This is either alternate count 2 of 5 or 4. In order of lesser and lesser probability, the highest probability is 1, 2, 3. A lesser probability is ABC of 4. And even lower probability is ABC of 2 of 5. Maybe this ABC is only the first ABC of a triangle 4, or the first ABC of a double zigzag 4, or the first ABC of a triple zigzag 4. So these remain low probability alternate counts, and our preferred is 1, 2, 3. And the action after that ends up being a 4, 5. 1, 2, 3, zigzag 4. 5, 1. A flat 2, zigzag 4, rule of alternation, a sideways and a sharp. Wave 3 is not the shortest. You have 5 waves down. Following all the rules, you didn't break any rules. You followed all the rules all the way down. You now have your first 5-wave impulse wave down forming intermediate wave 1 of 1 larger degree, which immediately adds information to your arsenal. Not only is your short position profitable based on the wave principle, but now you have 5 waves down of larger degree, telling you that if the alternate count kicks in, maybe this is only A. Now you've really got a big one. A, B, C. Now you're looking for lower numbers. Each time, evidence is added to increase the probability that the preferred count is in effect, and lowering the probability of an alternate count because of the 5-wave down of 1 larger degree now. So the first 5-wave down could have been a small ABC, but the larger 5 waves down means that that's at least a bigger one, or more likely, your preferred count is in effect. Now there's some more things we can do with this 5 waves down. One, we can project the retracements for wave 2. Remember the most common retracements. 0.382, 0.618, 50%. Now these are going to be guidelines, and it's going to be a forecast. In other words, if you were putting on a forecast, or writing down a forecast, you would base it on these Fibonacci numbers. You'd also see where your cluster again occurs with some of the other Elliott wave guidelines. Remember that an ABC rally will usually resist in the previous wave 4 of lesser degree. So if your cluster of retracements for your expected wave 2 counter-trend rally lands in the previous 4th wave of lesser degree, then you have added evidence that that will be another resistance point that will lead to further declines in the currencies. As it turns out, wave 1 was 8.6 points long. Take this number where the peak was, minus this number. You come up with 8.60 points. Now let's forecast where wave 2 is likely to be, and you can adjust your strategy depending on how short-term you are. A position trader looking for a major collapse in the currencies would want to ride the whole 5 waves down, or primary wave 1 down. Shorter-term trader would say, well, this decline has been going on for almost 2 months now, and we're going to get a rally. I've got to roll out of this March contract into the next one. Besides, sentiment has finally turned more bearish towards the currencies. People are finally saying, Well, maybe these things have turned direction. In fact, the trade deficit got bearish for the currencies, bullish for the dollar. So your market sentiment, all your things are starting to fall in place for a short-term low or an intermediate degree low in the currencies. So if you want, you cover your position down there, understanding that that may be just one of five, and you're going to leave on the table 2, 3, 4, 5. Wave 3 was the extended wave, so wave 5 is just most likely just to be a short wave 5. Maybe it'll be equal to 1, maybe it'll be 618 to 1. But it fell below wave 3, so we cover the position. Wave 1 was 8.60 points long. Multiply by 382 to get your first target, and you're looking for a 3.285 point rally. What you're doing is you're developing a cluster here for your initial target for wave 2. And you also can look over here and see that it's just above the previous fourth. In fact, there's another 4 over here. You're in the zone of the previous fourth. Now that can retrace 618, but this is just our initial forecast. And what we really want to do is look for an ABC. That's the only requirement. The 382 and the 618 is a guideline, but we're looking for an ABC rally or a double zigzag or a flat, but it needs to trace out an ABC. Those are the most important parts. Going on to the next page, there's your 5 waves down. 1, 2, 3, 4, 5, forming wave 1, alternate A. After that, you did an ABC. In fact, it was real close to your 75 number and real close to the previous fourth. ABC, above the previous fourth, in this previous fourth. It's in your cluster of initial targets, and it traced out an ABC, so can we label that 2? ABC 2. Or, what are the possibilities? 2, A of 2, in case it's a flat, and this is B down, C up, 3, 3, 5. Wave 2, you won't see a triangle. A triangle occurs in the B wave or the fourth wave position and precedes the final move. So you're not looking for a triangle in the preferred count. But it could be a zigzag, a flat, double zigzag, triple zigzag. There's still a lot of possibilities. So we can label this ABC of 2. It's right into our zone. So if you cover down here, you're reselling with a stop above this resistance, because if it breaks through that and does an X, it's going to do another ABC, which is most commonly equal to the first ABC, and it'll probably go to a 50% or 618 somewhere up here. So you want to take, again, the same approach we took at the top here. Resell the rally, or if you're a position trader, you might want to add the positions there with a stop above there on the positions you added, and resell up there if that occurs. As it turns out, as you can see right here, that it did drop straight down after that again. That's a straight line down on the daily chart, so you need to look at the hourly to see if that's subdivided into an ABC or a 5 to see if we're going to start the next move down. What we'd be looking for, if this was a 3, would be a 3, 3, 5 flat, right back to where we originally sold, forming a 3, 3, 5 flat correction, and we would change this 2 to over here. But for now, before we come back the next day's trading, we're leaving this wave 1 down, wave 2 up, and we've resold this Fibonacci zone in the previous wave 4. And again, 5 waves down, 3 waves up, counter trend. As it turns out, you can see the 3-step A, a B down, and a 1, 2, 3, 4, 5 C, forming a perfect 3, 3, 5 flat. You remember this from page 2.26 yesterday. 3, 3, 5 flat. Right there. In fact, again, because all degrees of trend are operating at the same time, we can continue to break this down and down and down from the daily to the hourly to the 5-minute. Let's take a look at this wave 2, and let's take a look at this 5-wave advance. So go from the daily 5 and move it down to an hourly 5. You can see the Elliott in progress on the hourly 5. This is the June Swiss franc, by the way. But there's B down to a new low, followed by a 1, 2, 1, 2, 3, 4, extended 5, 3, gap right in the center point. Remember, this is your real time. Now you're going hour by hour. Gap in the center point, 3, ABC 4, 1, 2, 3, irregular 4, rule of alternation, 5 of C. Now that 5 wave advance we just saw on the daily subdivides into 5 of C on the hourly, telling us, since all C waves must subdivide into 5, that this has to be the end of a flat correction. Not only that, but it's followed by a 5-wave decline on the hourly. So once you see that 5-wave decline off the high, what's happened? You've got 5 waves down in the currencies, you've got an ABC back up, followed by another 5-wave decline. Now, you're into April. Now, ever since the very beginning of January, you've been declining in 5s and rallying in 3s in the Swiss franc. Over and over and over. 5 waves tells you that the larger trend is down. 5 waves, and that tells you that that larger trend is down. And that's what keeps happening. As soon as you see this 5 down, you can eliminate the rest of the double zigzag possibilities. This was a straight flat. That is wave 2. We're now starting wave 3 down. In fact, let's go down one smaller degree, and let's take a look at this 5th wave and this rally, and look at the 5-minute chart. So now we've gone from a 90-year chart to a monthly 15-year chart to a daily to an hourly. Now we're down to 5-minute. And you can see the Elliott waves in operation again. This is that 5th wave down, right off that flat correction. And you can see that subdividing into 5. 1, 2, 1, 2. Thirds the longest, 3, 4, 5 of 3, forming the whole third, 4, 5. 5 waves down in the 5th. And then, subsequently, on the 5-minute chart, you can see that this is clearly corrective action. Nowhere is there this kind of impulse back to the upside. You've done 5 waves down. You're looking for an ABC. 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5, C. As it turns out, on the 5-minute chart, it did X, 1, 2, 3, triangle 4, 5, A, B, and then after this it did do a C. You can label this 1 and this 2. So what's happening here? We're still declining in 5s. We're rallying in 3s. Not only that, but it appears that under the preferred count that the payoff is finally here. In other words, we've done back a step here. 1, 2, 3, 4, 5, A, B, C, flat. What's happening now? We fell in the first 5 waves down of wave 3 of 3, the point of recognition, most dynamic part of the decline of the Swiss franc. And the thing that has kept us short is just following the rules of Elliott wave in real time. Again, 1, 2, 3, 4, 5, wave 1, A, B, 1, 2, 3, 4, 5, C of 2. That first 5-wave decline we saw, and then the ABC on the 5-minute chart is this 1, 2, 3, 4, 5. There's another 1. What we're going to do is subdivide the 3rd wave. In other words, this 8.60 point long first wave, we can now get a target, now that wave 2 has peaked, for wave 3. Multiply the distance that wave 1 traveled, times 1.618, and you get your net travel that you expect wave 3 to take, which is going to be over 13 points long. These happen to also be Fibonacci numbers, 8-point first wave times 1.618. Your target is for a 13-point third wave from the 75 and change peak is going to give you a downside target of 62.25 on the Swiss franc for wave 3. So we're going to keep that in mind, that it's a target. The most important thing is 5 waves down, but because the third can't be the shortest, we're going to expect it to be longer than 8.60 points, at least. And this is just wave 1. In fact, you can even add the positions there, because there's another trade deficit report, only this time it's interpreted as bullish for the Swiss franc. The trade deficit, after changing direction and showing as bullish for the dollar, finally showed bullish for the Swiss franc and led to another one of those 10-minute straight-up moves, scaring you half to death. But you've got your preferred counts, you've got your stops in place. Position trader stop is up there. A person who covered here and resold this area here has a stop above this Fibonacci zone. In fact, you can put it right above that high now, because we did 5 waves down off of a flat, and that is wave 2 under the preferred count. You can put your stop right there. So they can come out with all the trade deficit reports they want. They can come out with whatever they want. Your stop's in place. You can hide under your desk during the report. It's a 10-minute straight advance. I do that. When Debbie comes in my office, Debbie's my secretary, and I'm hiding under my desk, she knows there's a trade deficit report out. But I put my stops in place before I hide under the desk. So it goes up, I come out, I see it didn't stop me out. If it goes above this number, something is terribly wrong. We've followed all the rules. It's an ABC flat. If I get stopped out, I got to go back to the drawing board. Something's wrong with my wave count. 1, ABC 2, if I get stopped out, something's wrong with it, trade deficit or not. This is a 5-wave decline, further adding support to your preferred count. Let's see what happened after that. And remember, don't be afraid to count 1, 2s. Here's your C of 2 again of the flat. 1, 2. We can see that by the next day,